Good evening. On behalf of FCS Financial, I'd like to thank you for joining us tonight. My name is Kelly Erdman. I work with the crop insurance team out of the Higginsville and Harrisonville branches. I'm excited to have three people from our team of experts here tonight to go over changes and reminders for the crop insurance program for 2023. Our presentation tonight is about 40 minutes long. First, I would like to go over some logistics of the meeting. On the bottom of your screen, whether on a smart device or a computer, you should see a toolbar. The audio options will allow you to change your audio settings, and if you click on the toolbar, you'll see several other options and help sections as well. All of our attendees are in listen-only mode, which means your cameras and your microphones are not on. If you have any questions or comments for our presenters, please use the Q&A box. We will take a few questions as time permits at the end of the meeting. Next is a raise hand button. You can use this if you have any issues, and I'll send a chat to see if I can help. Finally, you'll see a chat button. You can use this to communicate directly to our staff even when our cameras are off. I will do my best to help with whatever I can. If you are having technical difficulties, often logging out and logging back in can help. If you are having audio issues, sometimes calling in from a phone can be a more reliable option than listening over the internet audio. As we begin tonight, I would like to mention that there is no way we can cover all of the details about the crop insurance program in a brief meeting. Please contact any of our branch offices and our staff will get you in touch with a crop insurance agent who can answer your questions. To start out our meeting tonight, let's take a look at how commodity prices are averaging for your insurance policy. These charts reflect the Chicago Board of Trade prices from October to now on December corn contracts and November bean contracts. The February average of these prices is what's used to set your crop insurance guarantee. In 21 and 22, the price volatility was high, which contributed to some increase in premium cost. If prices are less volatile during February's discovery period this year, it may help improve premium costs slightly. Average corn prices have been pretty steady around the $5.95 mark all month. Soybeans have seen a steady yet gradual increase through the month. We started the month at $13.60 and are at $13.74 now. The 2022 drought was widespread across the country. Losses for 22 were directly correlated with drought, and we can see the impact it had on some Missouri counties. All of the state was affected, but you can especially see the impact in the southwest of the state. Starting out short on moisture is not our favorite way to start the planting season. The drought monitor for Missouri is showing a range from normal to D2, but has improved steadily over the last several weeks. The U.S. Drought Monitor map shows extreme and exceptional drought not very far west of Missouri. Obviously, this gives us concern if that trend would move further east and impact our growing season. I would now like to welcome our first presenter, Haley Rook Chandler. Haley is an Assistant Vice President on the crop insurance team out of our Joplin office. Haley will begin explaining some of the changes we will have for 2023 policyholders.
Thanks, Kelly. There have been a few changes in crop insurance for the 2023 crop year. I'll be covering a few of them that you see on the screen, and my teammates will be covering the rest. First up, we have some counties in Southwest Missouri, which is my home area, that have newly added insurable crops. For corn, Texas County has been added, and for soybeans, Christian, Douglas, and Texas counties all now can insure soybeans. If you live in any of these counties with newly insurable crops, or just want to open a policy in any other county with insurable crops, there are a few things you'll need to get started with your crop insurance policy. We will need past production and acreage if you've previously planted that crop in that county, and settlement sheets or livestock records can also be used to help build your production history. The deadline for sign up is March 15th, but make sure you talk to your local agent sooner than later to make sure we have enough time to get your policy set up just right. Next, we will look at the soybean plant date changes. On the left side of the screen in red, you can see the initial plant date has changed statewide to April 15th in insurable counties. Initial just means the first day of planting with replant coverage. You may plant prior to the initial date, but it will just be without replant coverage. On the right side of the screen, you can see the final plant date changes for soybeans. The tan part in the northern part of the state has been changed to June 20th, and the blue part has been changed to June 25th. Some counties have had some date changes, so make sure you double check your county on the map to check for your date. Next, we will look at the southern part of the state where there have been some changes in the final plant dates for different types of soybeans. On the left, you can see the final plant date for the NFAC, which means not following a crop, or first crop soybeans. It is now June 25th, which is 5 days earlier for many of these counties than in years prior. On the right side, in the darker blue, you can see the date for insurable FAC beans, which stands for following a crop or double crop soybeans. The final plant date is now July 5th. This is 5 days later than it used to be for many of these counties. So make sure you double check your county for those crop date changes. The end of the late plant period, the time where coverage reduces 1% per day after the final plant date, is actually the same for both crop types, and that is July 20th. And that's also a change from previous years. There have also been some changes in coverage for oats around the state of Missouri. Coverage has been available in the past, but only through an APH policy. But now it has been updated to be offered on yield protection and revenue protection policies in the highlighted counties on the map at the right. The oats price for crop insurance is based on a factor of the February average of the September Chicago Board of Trade soft red winter wheat price. On the map, you can see on the right, you can see the final plant dates for insurable counties. Most are April 15th, with the exception of Vernon County, that is March 15th. And the sales closing date for oat insurance is March 15th, just like corn and soybeans. Whole farm and micro farm are policies that are not widely used in Missouri, but can provide coverage for commodities that have not been traditionally covered by any other available crop insurance policies. For 2023, RMA announced increases in the amounts of revenue a policyholder could cover under these programs. For whole farm revenue protection, it can provide a coverage for up to $17 million in revenue. And micro farm, which is a simplified version of a whole farm revenue protection policy, can provide coverage for new insurers up to $350,000. That is all I have, and I will hand it back to you, Kelly.
Thank you, Haley. Our next speaker this evening will continue to cover some changes that will impact the crop insurance program for 2023. One of the changes she will cover is double crop insurability, something that has been in the national news since last July. I would like to welcome Mitzi Winder, an Assistant Vice President with our insurance team in the Chillicothe office, to share the details.
Thanks, Kelly. Good evening, everyone. As Kelly mentioned, I'm going to be covering some double cropping changes, some transitional yield changes, and some different products that are available for 2023. The double cropping changes for 2023. Last summer, President Biden made an announcement that RMA would try to ease the burden of ensuring double crop production. And as a result, the areas in orange no longer require past production history for double crop soybeans and double crop grain sorghum to request insurability. Those blue counties are where double cropping practices have already been in place in the past. Next, let's look at relay cropping. Relay cropping is a practice where a second planted crop is planted into an already established crop in a manner that allows for separate agronomic maintenance and harvest. If you are in those counties in yellow or zone 1, You would not have to show any prior production history to submit a written agreement for this year. The double cropping and relay cropping written agreements would need to be submitted by acreage reporting date. And although no prior history is required to submit a written agreement, if it helps you, certainly provide that to your agent so that we can get that higher yield established for you. And then those following years, all renewals would need to be done at sales closing. Keep in mind though, that when you are submitting those written agreements, you need to provide your agent with a few things. First, your production history, if you have it and if it's beneficial to you. Also, the dates you normally plant and harvest the crop, as well as where those acres are located. Next, we're going to cover some T-yield changes for corn. But first, let's go over what a T-yield is. T-yields are yields that are assigned by RMA by county for each crop. They are used in your databases if you have less than 4 actual years of production. The next 5 items listed there are examples of when you would be using the T-yield. All new producers and all ground coming out of CRP would receive 100% of the T-yield. If you're adding land in the county, you will receive either that T-yield or your individual simple average, whichever is higher. And then lastly, both yield adjustment and assigned yields work off of a T-yield to establish those numbers that get put into your databases. So this next slide is a map of irrigated corn T-yield changes for 2023. For years, RMA has been working toward establishing separate T-yields for different irrigation practices, and they will not allow you to use your non-irrigated production to establish an irrigated insurance unit. So the increase in some of those counties will be very beneficial. The counties in green and blue have definitely seen some significant shifts. This next slide shows the non-irrigated corn changes. Again, RMA has been reviewing reported production from each county, and thankfully they are providing more timely updates on corn T-yields. In those added land or new producer scenarios, raising those T-yields really help to improve those guarantees and bring those up. As you can see, many counties in Missouri are seeing a 5 to 15 bushel increase. So now let's cover some products that are offered to help customize your policy. Those top 2 products, revenue protection and yield protection, are the products that insure most of the acres in our state, but the county expected yields have increased over time. And if you haven't looked at SCO or ECO coverage in several years, it may be beneficial to look at those again. Those are both area-based products, and so they are not based off of your individual yields, but they can help improve coverage in that deductible gap where your multi-peril leaves off. SCO would cover up to 86%, and ECO picks up from that 86% and would cover up to 90 or 95%. Keep in mind, though, that if you are enrolled in ARC, which is the agricultural risk coverage at FSA, you're not eligible to carry that supplemental coverage option. And then we have margin protection. It's another product available, and it provides coverage against an unexpected decrease in operating margin. The sales closing date for that is September 30th, which is already passed for 2023. But if it's something that interests you, reach out to your agent. One size does not fit all on these products. So once again, your agent will be able to help you figure out which products will best fit your individual needs. This next slide shows a few ways that you can add some additional coverage to your multi-peril policy. A crop hail policy would cover those yield losses caused by hail damage, fire, any type of vandalism, and transport to that first place of storage. You can also purchase wind coverage, green snap, and extra harvest as an add-on to your crop hail policy. Purchasing extra replant coverage would allow you to plant earlier than your underlying policy allows. So you might take a look to see if that is something that would benefit you if you find yourself planting early or wanting to plant early. There are also some additional revenue private products that can provide similar coverage like SCO and ECO, but instead of being area-based, they are established from your individual history, and they may be more economical for you than SCO and ECO coverages. These will probably differ from company to company, but they may allow coverage for additional unit structures. I think that's all I have, Kelly. So back to you. Thank you, everyone.
Thank you, Mitzi, for guiding us through the changes on tea yields and coverages available to producers through written agreements. Missouri is home to several major river systems that can complicate crop insurance coverage with high-risk ratings. For 2023, RMA has reclassified acres throughout the Missouri River bottom and other tributaries. Our final speaker, Kathy Bauer, will help explain these changes and cover a few important reminders. Kathy is a financial services specialist with the crop insurance team from our St. Joe office.
Thanks, Kelly, and thank all of you for joining us for this meeting. A number of changes have occurred in high-risk areas through Missouri. I will briefly cover these, but suggest you meet with your agent if your farms are in these impacted areas. In looking at this map, all of the colored areas have changes. We see a lot moving from standard to high risk, as well as some moving from high risk to standard. Notice the red circled counties in Crawford and Miller. High risk has been removed entirely from these counties, and they are now standard rated counties. Looking at the river systems impacted by the review for Northwest Missouri, on the map to the left, Atchison County has a lot of acres moving from standard to high risk, showing in red, along the Missouri and the Little Tarkio River, as well as some in Holt and Andrew counties. In Nottoway County, we see some high risk moving to standard. In all the blue areas, these are existing high risk areas, which also may have rating changes. The map on the right, looking at Buchanan and Platte counties, this is the area where I live and service policies. And as I'm reviewing these policies, I'm seeing quite a bit coming into high-risk rated ground, as well as rating changes around the Platte and the 102 River. In West Central Missouri, you can see from the map, there is quite a bit of moving from standard to high risk, showing in red along the Missouri River. In Central Missouri, not only do we see some areas moving into risk rated, but quite a bit moving from high risk to standard, showing in yellow in Osage, Marys, and Phelps counties. Also notice some in Cole County that has now become unrated ground, showing in dark purple. To obtain coverage on unrated ground, it would have to be granted through a written agreement with RMA. In East Central Missouri, we see a little bit of ground now being considered unrated as well, showing in purple, and the area in Crawford County along the Merrimack River moving back to standard rate in yellow, as I mentioned earlier. You have choices on insuring high-risk ground. I encourage anyone who farms high-risk ground to meet with your agent and see how these changes affect your farms. You can make a plan and choose the options that work best for your operation. Just a few reminders. As farming operations continue to become more complex, we see farmers establishing new entity structures. While you may be operating the same equipment on the same ground, creating entities changes how a policy needs structured. The deadline for these changes is March 15th. Also, signing these documents correctly with these entities is crucial, as well as completing the requirements at FSA for new entities. In transferring APH, BFR and VFR means beginning farmer rancher and veteran farmer and rancher. To get started in farming, these groups can qualify for certain benefits for up to 5 years. One of these benefits is the way they can share another farmer's production history. The BFR, VFR folks can participate in the management or the physical activities versus the standard transfer rules, which require both, unless the insured has a share in the crop for the current year. Just a note about transferring production: be sure you are able to prove the involvement you're claiming, and know that yields that can be transferred are subject to audit. APH improvements: YA, YC, TA, and YE. When reviewing an insured's coverage, these options nearly always provide benefit. I like to call YA and YC APH protectors and TA and YE APH enhancers. If you aren't sure if you're getting the benefit of these options, one of our agents would love to have the opportunity to visit with you. Precision farming can provide you with benefits as well through convenience by allowing you to use your precision data you're already capturing to simplify reporting and record keeping. You can also save money by ensuring exact acres planted and harvested. A further benefit is time savings. If a loss occurs or review, fewer records are required for the adjuster. These are the topics I was covering this evening. Thanks for listening. Now I'll turn it back over to Kelly.
Kathy, excuse me, thank you for reminding. I'm sorry, I wasn't ready for that. Kathy, thank you for reminding our audience about the importance of speaking with our agent about high-risk land and other important policy reminders. FCS financial team members have covered a number of 2023 important policy changes with you tonight. As we prepare to close this evening, I'll cover a few remaining items we feel are important to share with you. Okay, the Congressional Budget Office has indicated that we are likely looking at over a $1 trillion farm bill, the most expensive in history. The House and Senate committees on agriculture are moving through the steps to complete this process. Completion is running behind, and it will take several things coming together to get it completed on time. Crop insurance serves as a cornerstone to the farm safety net, but that doesn't mean it won't face challenges. We encourage you to be engaged in the process and share your voice of support for the crop insurance program. According to the latest Congressional Budget Office estimates, crop insurance is projected to make up about 7% of the total farm bill expenses. Historically, the Farm Bill has enjoyed support from both parties, and we hope that tradition will continue. The common themes listed on this slide are goals that are apparent for USDA and RMA's current and future programs. One of the common themes is climate smart agriculture. PACE is an example of a climate smart insurance policy. PACE, the post-application coverage endorsement, is an endorsement that's now available in some of our bordering states. As you can see, it's not currently available in Missouri. Where it is available, though, it provides coverage for producers who split apply nitrogen and are prevented from post-applying nitrogen between the V3 and V10 stages. The green areas on the map show where it expanded for 2023. This may possibly be offered in Missouri in future crop years. USDA and RMA offer assistance programs that are often tied to your crop insurance policy. Each of the following programs require producers to carry multi-peril crop insurance, or FSA, non-insured crop disaster assistance program, also known as NAP, at a 60% level or higher for the 2 following crop years after being part of one of the programs. The Emergency Relief Program, ERP, Phase 1, which is no longer an active program, was based directly off of 2020 and 2021 eligible insured losses on your crop insurance policy or NAP program. ERP Phase 2 is open for enrollment now until June 2nd. Phase 2 is a tax year-based program that provides assistance for producers that suffered a revenue loss associated with eligible crops due to a qualifying disaster event that occurred in the 2020 or 2021 calendar years. Contact your local FSA office if you need to enroll in this program. The Pandemic Assistance Revenue Program assists farmers who had a revenue loss due to the COVID pandemic. It is also open for enrollment now through June 2nd. There are a few premium impacts that you'll see on your policy, or that you could see on your policy this year. The Pandemic Cover Crop Program, PCCP, is no longer available. PCCP gave you up to a $5 credit on your insurance premium if you planted and reported cover crops, then followed them with an insured row crop. This program has not been renewed for 2023. If you've been receiving this premium credit, you won't see the premium reduction on your policy this year. Another big change this year is your due date. The last 3 years, RMA has pushed the due date on your spring crop policy from September 30th to November 30th. This year, we're back to normal. Your bill will be due on September 30th with interest attaching on October 1st. Make sure your payment is mailed with plenty of time to get to the company by September 30th. Livestock product offerings. Pasture rangeland forage ensures against the lack of precipitation on pasture and hay ground. It's based on the deviation from average in a 12-mile by 12-mile grid, not the exact rainfall of your location. Sales closing for PRF is December 1st for next year's policies. Livestock risk protection works similar I'll start that over. Livestock risk protection works similar to a put option and protects against declining market prices for fed cattle, feeder cattle, and swine. It is not a death insurance policy. Prices are based off of the Chicago Mercantile Exchange and change each day the market is open. You can now follow daily subsidized prices on FCS Financial's website. Please use the QR code on this slide to find the page on our website. It is available anytime the CME index is open and issues prices. Prices are issued late afternoon and endorsements need completed with your agent by early the next day. Let's see. This bar chart shows the amount of fed and feeder cattle insured in Missouri for the last several of years on LRP. Large increases can be seen between 2021 and 2022 due to subsidy changes that occurred, making it more affordable for producers. As you can see, 2023 is off to a fast start and will soon surpass the number of insured head for 2022. Another change that occurred in the program allows producers to pay at the end of an endorsement period instead of when the coverage is taken out. This year, we've seen increases in annual head limits for both cattle and swine, and weight increases for both fed and feeder cattle. Producers will now need to prove ownership of their cattle at the end of the endorsement period. This was implemented to prevent speculation on a government subsidized plan. LRP has very tight timeframes, so if you're interested, contact your agent early. In the livestock category, I'd also like to mention we also offer dairy revenue protection and livestock gross margin insurance. Please reach out to your local branch office if that's something you'd like more information on. We would like to welcome back all of our presenters tonight. We have a couple questions from our attendees to cover. Okay, our first question tonight is, I have a son who is thinking about coming back to the operation. How do they get the beginning farmer benefits? Kathy, would you like to speak on that one, please?
Sure. These benefits can be very helpful for a beginning farmer or a veteran farmer. At the time you complete your insurance application, there is a form to request beginning farmer and rancher benefits. This is required for each person listed as a substantial beneficiary interest on the policy. For example, if you are married, an application has to be submitted for each of you and your wife. Also, if someone has been producing before they were 18 or while they are enrolled in college, there may be ways to exempt them from that time to get the full 5 years worth of benefits. Reviewing the situation with your agent is critical to make sure all the documentation is in place to keep from jeopardizing access to these benefits.
Thank you, Kathy. Okay, our next question is, if I would request insurance on double crop soybeans, is there a downside in doing this? Mitzi, could you handle that one, please?
Sure. Great question. So one thing that complicates a decision to insure double crop beans is how it would interact with the unit structure on your policy, because this process does not allow you to insure them separate. So for example, if you have enterprise units and you receive insurance on that second crop bean crop, those would also be in the same unit as your first crop soybeans. So you could not have a situation, or so you could, I'm sorry. So you could have a situation where your first crop soybeans would produce well, and then your second crop soybeans did not, but there's not enough of a loss to make payment on those second crop beans. So we strongly encourage you to review this with your agent before requesting insurance on those second crop beans.
Thank you, Mitzi. And our last question for tonight is, if I disagree with a high-risk rating change applied to my land, is there anything I can do? Kathy, would you like to take that one too, since you talked about high-risk coverage?
Sure, that's another good question, and it does come up. RMA does have a process where a producer can request further review of their high-risk land classification. This form is called a request for actuarial change, and RMA has specific requirements about information that needs to be submitted with this form based on your situation. For instance, if the request is on land that is protected by a levee, information on the levee system is important for RMA to consider a different rating. It is also helpful to include any improvements that have been made to your land, such as drainage work or tiling. If the ground is at a higher elevation than typical bottom ground, some farmers refer to this as second bottom ground. An elevation map could be included in the request. Past production history is also required to be submitted and will be an important piece of RMA's review. These types of requests are best to be submitted as early as possible, and we encourage you to visit with your agent so they can help identify all the information necessary to complete the paperwork.
Thank you, Kathy. That's all of the questions that were submitted tonight. If you have questions that you didn't submit or are starting to think about, please reach out to the agents in your office and they'll be happy to help you with those. And also remember that the deadline to make policy changes or sign up for a policy is March 15th. So it's coming up pretty soon. Thank you for joining us tonight. When you close this event, a survey is going to pop up. That survey is very important to our FCS financial team. If you could spend just a few minutes on that, we would greatly appreciate it. In order to make sure you stay aware of everything happening at FCS, please visit our website and sign up for email alerts, and make sure and follow us on Facebook, Twitter, or LinkedIn. Once again, thank you for your participation tonight. If there is anything that I or any of my team members can do for you, please do not hesitate to reach out. Thank you.